Hi guys, welcome to day 10. No, day 12, the last day of my Vlogmas series, and we've talked about all sorts in this series. Today we'll be talking about the global economy in 2026, what you should be looking out for, and how to position yourself as an individual. If you missed any of the days, you need to go back and watch them. They're on our channel. We've talked about planning your finances, personal financial planning. We did a walkthrough of how to plan your finances in 2026. We reviewed investment from 2025. We talked about how to avoid being broke after Christmas. A lot of interesting things. So I encourage you. The links will be in the description. So after this live session, go and watch the replays. But today we'll be talking about the global economy in 2026. Now, why are we talking about the global economy? If you don't know, it's literally like a farmer who wants to plant apples, for example. If apples randomly need dry weather and there's a forecast that is going to rain, then you need to rethink your strategy. You can't just walk straight and go head into that season or that planting season. Why? Because your crops are destined to fail, right? They won't grow. So the essence of this is that while we are talking about how to make more money, while we're talking about investment, while we're talking about all the beautiful things, making more money, blah, 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 we need to also consider the economy because you do not live in isolation. So today we have a beautiful and amazing guest, and he's someone who has been in the commodity space, who is now in the data space. And the idea is that let's look at the economy as a whole, the global economy. Remember, you are in an environment, you can't avoid it. If you don't know already, things that are happening in China are affecting you. The trade wars between countries are affecting prices of goods, and that's literally how it affects you. So I'll be bringing him in and I'm introducing him at the same time. So we have Yemi Olayemi Odutola. Olayemi is now in the finance space, but he was in energy space before. He did some commodities trading. Like, he's in the best place because best place to talk about the global economy, because if you've done commodities or if you know anything about commodities, one thing you should know is that the global economy impacts the prices of commodities. You can see a direct correlation. So we have an amazing guest, Olayemi Odutola, and he will be talking about 2026 from a global economic perspective and what you should be doing, how you should be positioning your own personal pockets. Because last, that's what matters to us, right? So welcome, Olayemi.
Thank you very much for having me. Hi,
Fantastic,
everyone.
fantastic.
Yeah.
Hi, everyone. Of course, if you are listening in, please say hi. I see people joining in live actually. So please just drop in the chat where you are listening in from, and we'll be sure to pop you in. Say hi, your name, where you're listening from, and we'll pop you in. So let's start with like a foundation, right?
Yeah.
What kind of economy are we heading into in 2026? What are we know there are economic indices, right? Where do you think we are going in 2026, considering where we are or where in 2025?
Well, a lot of things have happened in 2025 that's shaping up that would impact 2026, and such as the AI growth, the multiple tariffs back and forth with the US and various countries, as well as the Fed's cutting rates, right? So, for example, you cannot predict exactly what is going to happen, but I think this tariff thing back and forth would continue with the US negotiating with different parties, as well as the Russia-Ukraine war, as well as now Venezuela is in the picture, which is an oil-producing country, and the US is having to stifle their supplies, and that's invariably going to affect the global market as well, the oil prices as well. In case of the Russia-Ukraine war, Europe is trying to cut off Russia's supply of gas. That's also going to affect the world economy. We cannot discount Fed cutting rates. Some experts are saying that there are going to be further cuts, which is something that the President of the United States is routing for, such that the rates go down. But if rates go down, obviously, bond prices will start to rise, and that will affect our coupons invariably, so to speak. So there are a lot of things, and then we cannot also discount the effect of AI as well. It's affecting different. It's not only tech; it's affecting the utility sector, the logistics sector, and then a lot of people have invested in AI, so we expect that there's going to be some sort of correction. So they're going to
Yeah.
separate the men from the boys. So there are a whole lot of things that are going to be happening. And then
Mm.
when rates are coming down, then there's cheaper funds, right? So obviously the emerging markets are going to be going into um, they're going to be going into uh, borrowing more money, and then that's going to bluster the economy as well. But we also have to be very, very careful of the kind of bonds that we invest in terms of emerging markets, because once the economy starts to perform based on the monies that they've borrowed, we also have to be sure that their debt to income ratio is balanced. Thank you.
Fantastic. So, one of the things that I literally was at a conference, an African investment conference in Nairobi last week, and there was conversation around the interest rates premium, the risk premium over Africa, and I think that's a debate whether it is perception or reality, you know. But I mean that's something that we can argue about from head to toe, but we still pay the premium any which ways and
Mhm.
all. But then you are right, in terms of um what we think would happen. But I like something that you said at the start where, okay, we can't literally predict. But I want people to listen in on this session more like a scenario planning type thing as
Right.
against a black and white, this is what is going to happen. So we should
Okay.
be thinking about this conversation from a, if this happens, right? What would I do or what should I do? Right? There's a chance that this would happen. How do I think it would affect me? And what should I be doing right now to hedge just in case it crystallizes? Or if this thing happens and it is good, how do I make sure that I optimize on it? Right? One of the
Right.
things that you've talked about is AI and the fact that there have been a lot of investment. There's a lot of debate around whether there is a bubble, right, in the AI space.
Mm.
But you know the way these things are, you can't entirely say there is a bubble until it actually bursts.
Yeah. Exactly.
And that's the reality.
Yeah.
So I will now go on to my next question really. For individuals that are listening in, there's always this there's the way news is generally portrayed is makes people afraid, right? Makes people
Yeah.
say, oh, if prices are going to go up, then what should I be doing? Or maybe I should go and stock up, if you get what I mean, right?
Yeah.
But in the midst of this, we are this is an investment. So fun fact, Ola is an investment, is a member of my community. Yeah, I didn't say that, but you
Right.
yeah, but the essence, the people that are attracted to this channel are focused on personal finance, investing, and the economy, right?
Yeah.
And the game of personal finance for you to actually build wealth, right? Not just say I manage my money and let it in the bank. So, in this whole expectation, blah blah blah, where do you think that people are likely to find opportunity despite the uncertainty?
Okay. I would say for things that work for me, and then things I think are a bit not extremely risky, to be honest, because when you're going into an uncertain territory or uncertain times based on what is happening in the global economy and how things are moving, or look at the bond market. Now, if you're looking at the bond market, I would say because bond prices are rising right now, and we can say, for example, the FGN bonds, right? The Euro bonds, for example, have the prices have been rising. I've been seeing market prices, and then you would ask for prices today, and then the next day prices have risen by
Gone up.
like a dollar 50 or more, for example. So if you're going to be investing in that, I think you should take like a long-term play. It's something and then basically by the time you take a long-term play, there's probability that the prices will not be as high as $100 per unit. So, and then if bond prices are rising based on the anticipation that there are going to be further cuts by the US, right? Even if your coupon rate is kind of low in the 6-7% range, right? You'll be catching up on that when you're going to be selling your bonds. Yeah, and then obviously you can sell it in the secondary markets before, even if you buy a 2040, 2045 bonds, for example, at least you can sell it off in the market and still make like
A
a
good
huge chunk,
spread.
something that a good
Okay.
spread that you sacrifice based on the prices that the discounted prices that you bought, discounted, so to speak.
So after I finish, I'm going to explain all this in simply because I can imagine people saying, "What is he talking about?"
Yeah,
But of course, I can see people listening in live. If you have any questions, please ask. We're happy to explain. But you said bonds, right? So let me allow you land. So you said bonds is something you will look at, and
yeah.
it's quite logical. So after bonds, okay, where would you see the opportunities? Where else?
The equity market, yeah, basically shares. And then if you're going to be looking at shares, to be honest, you're going to be looking at the big players. You're not going to be taking risk on any small players because at times like this, when there's a war going on, there's another one in the making, or maybe like some sort of bullying or some sort of expected oil price is going to go up or be a little bit volatile because of this Venezuela play. I would look at the equity market and basically looking at the guys that have proven they have proven track records. Stocks like Nvidia, the likes of Amazon, Apple, Google is trying.
Oh my goodness.
Yeah, laughing because I said
Ah,
Nvidia.
I'm laughing because
I'm an advocate of
Yemi is a shareholder in Nvidia. Not just a no, it's not just
I'm
shareholder, it's their family member. That is a better way to say it.
an
Not just
advocate,
shareholder, family
and
member.
they've thrown all sorts at them right now. Google is trying some funny pranks. Well, it's called diversification. Competition is very good anyway, and then it just basically shows how strong you are as a company and how you can diversify into other markets.
Yeah.
China is open up for them. It's either opening up today or closing up based on the kind of relationship and the kind of weather that the president finds himself.
President.
Exactly. So, and the price had been a bit stable at 180. So, if you want to be playing in that space, it's okay. But there are going to be other smaller AI companies. There are going to be startups. There are already startups that are pitching AI related solutions and all that. So be very, very wary of such kind of investments because a lot of people are going to be throwing all sorts at you. So,
Yes.
but
Yes.
if you're not sure, it's better you just ask someone. But also in that space, we're going to be looking at the banking sector as well. If things are evolving and rates are dropping and people are funding different transactions, the bankers are going to be out there, right? And those are the guys
Yes.
that are going to be funding it. Those are the guys that are going to be they're going to be advising on this kind of deal. For example, the Warner Bros.
Yeah.
Paramount, Netflix, Bruhaha.
Netflix.
One of the
Yes.
one of the global banks is going to be financing Paramount to the tune of almost 60 billion in cash. So when Netflix is still talking to Warner Bros. Management, Paramount is already talking to shareholders and willing to drop a cash of
Cash.
103
Yeah.
billion. So where is this money going to be coming from? It's going to be basically the banks, private equity, and then the likes. And we've seen some of them in Africa with all the manufacturing and people coming up into the manufacturing space. So
Yeah.
it's
Yeah.
basically equity bonds. Crypto has been a bit volatile despite all the policies from the United States, right? If you know your onions in the crypto space, well, you can play it, but it's a bit dicey right now. Things are a little bit volatile as well. Um, in terms of fixed income markets, the margins and the interest are a bit low, right? But if you want to be very conservative in terms of your investment, I think it's also somewhere that you should look at, basically. So
Fantastic.
yeah, but it's not all cast in stone, right? So as the year evolves, you start to look for other opportunities that can open up in terms of investment. So it's not like, okay, these are the key investments that you should look up and lock up. You have to keep, as things evolve in the globally, then you start to pick up options along the way. Thank you.
Along the way. Along the
Yeah.
way. Fantastic. So I said I was going to explain something, right? So
Yeah, the
one of the
bond.
things like Olaimi was talking about was the bonds market. And it's just for you to understand. He was talking about coupons. Coupons are the interest rates, right? Bonds are basically interest rate instruments, but they are long term. When I say interest rate instruments, you give them your money, you give an entity your money, and then you get interest for a period. And then at the end of the period, you get your principal back along with interest, right? That's how it works. But what usually happens is that when the corporate entity or the government sells that bond to you, a few days down the line, you can decide that you need cash and you can sell to somebody else. Now, the price that you sell to somebody else is dependent on whether there's a lot of supply of that particular bond or there's a lot of demand for that particular bond. Of course, if there's a lot of demand, the price will go up. If there's a lot of supply, the price will come down. Now, if we are saying that the feds are going to keep cutting rates, it means that to borrow will be cheaper, right? What that means is that people can actually borrow and buy the bond, meaning that there's a chance that demand would be higher and then the price would go up. Now, if you're already an owner or a holder of that bond and you bought at 100 and the price is now 120, the money and you can decide to exit. We're talking about, and this applies to all interest rate instruments. Once the Fed and most of the central banks, which we expect that they would continue to do, once they keep cutting rates, no matter how tiny, you would see that it will continue to impact the prices of bonds, such that if you are already a holder, you would make money. That is the expectation. But are there things that can slow down the Fed from cutting rates? Yes. Inflation is one of the things that they look at. If inflation goes AWOL, they would slow down. If there is a massive war and a massive war will actually feed into inflation, they would slow down. Those are the things, right? And so this session, like I said, is not about us saying that black and white, this is what's going to happen. It's about saying these are the possibilities. And once you start seeing that the Feds are going to cut rates, then or there's that guidance because President Trump, for example, is really pushing for it. Once you see that it's getting stronger and stronger, what are you supposed to be doing? Positioning yourself. That's actually how you make money. Yo. So Olaimi has said bonds is one place you consider, stocks is another place that you consider. Um, Another place also that he said was crypto, but he said you should be careful.
Yeah.
Careful because and I think that's generally the case with cryptocurrency, right? Always it's nice to have it as a part of your portfolio, but don't make it 100%, right? I have met some people who have all their investments in crypto. I'm like, why? But to each man his own cup of tea.
Yeah. I
So
also
I want
like
to
to
ask.
add
Okay, go ahead.
one other sector, right? When interest rates drop, yeah, obviously there's going to be banks lending or financial institutions lending to buy properties and all that. So definitely mortgage rates would drop.
Yes.
Um, Now, basically, what they for at the current rates, right? They're saying that the cuts in rates have already been priced into the current mortgage prices, right? I mean mortgage rates, right? Which means that all the rates of 25 basis points and all that that's been going on for the past three cuts, they've been priced into the current mortgage rate that is being given to lenders. I mean, sorry, to borrowers. So an increased cut in rates by the Fed is also going to affect mortgage rates. So that means it will reduce the cost of borrowing. However, that would
Push up the
increase
prices.
because that would push up the prices. However, now in the US, because of COVID, a lot of builders have built a lot of houses. So there's a lot of inventory. So there's going to be, at some point, there's going to be a balance between people that have houses to sell and people that have houses and that want to buy
I want
houses.
to buy.
Right now, there's a lot of supply of houses, and so it will be at an advantage for you when rates start to go down to be able to negotiate what price you want to buy a house and at what rates. So if you're looking to buy a house in the US or Canada or in the UK or developed society really that are grossly affected by these rates, right? I think it's something. I think you start looking out, right?
Looking
As
out.
yeah,
Yeah.
looking out for opportunities, and then you can start negotiating because it takes time to close such deals. So
Yeah.
the interest rate comes down, then you have willing power to like negotiate with the lender and able to get
Yes.
a very good deal
Yes. There's
out of
also the option to refinance depending on your contract, right? So
exactly.
even
Yeah,
if you've already gotten into a property, right,
yeah.
one of the things that as the rates continue to go down, you
Hmm.
can consider, right, except if your terms, you should look at your contract to see what it permits you to do. But you can either refinance with another counterparty or renegotiate, right, downwards based on where market is. So that's something that could be of benefit to those that have already bought, especially for people that are like Nigerians or Africans living outside of the United States that buy,
Hmm.
your interest rate is usually higher.
Yeah.
And so they would price in the premium of not being a resident and also price
Yes.
in general markets. So there's
Yeah.
a case for you to actually engage with other parties to see if you can get a better rate or even negotiate with the current banker or mortgage lender, right? To
Yes.
see if you can negotiate as this rates begin to come down because it should also affect you. That's the benefit of a rate cut to everyone, right?
Yeah.
And then so let's move on, right? What key sectors are you keeping an eye on? I think you sort of touched on it, but the way I'm looking at it is we encourage people to go into the stock market. The stock market is the easiest place to invest.
Hmm.
By the time you want to go into venture capital, there's a lot of efforts, brain work, skill
Yeah. Hmm.
that is required, right? But if you wanted to invest in companies, um, the easiest way to access that is in the stock market.
Yeah.
So maybe my question, let me frame my question a little bit. What sectors do you think would benefit from the expected drama of next year? For
You mean
example, we say
globally or okay?
globally, not just This is we're talking about the global market, such that people should look at companies in their own space that they can plug into. But what sectors would you say? Oh, these are the sectors that, based on the noise that Trump is making,
Yeah.
I think that people that will benefit from it. So if there's a war, these are people that will benefit from it. That kind of thing.
Well, the manufacturing sector is going to definitely benefit from it. Cheaper funds mean cheaper financing for for their transactions and then for their production and then increasing production and basically spreading their tentacles. People are trying to diversify their supply to from the US because of the tariffs. They're trying to live out of that uncertainty that is affecting them. Because by tariff today, you're bringing up tariffs today, and tomorrow you're taking it off. So people are trying to diversify and looking at other markets. And then when you're going to be looking at other markets, you don't have you're either acquiring an existing plant or you're building one, or both of them, acquiring one and expanding, or building a new one and then looking out for ways to come into different markets. So, and that not everybody has cash to go into the such transactions. So, I'm looking at the manufacturing space. Also, you cannot neglect the tech space as well. People, AI is has come to stay, whether it's being blown out of proportion or not. There are players, people are taking positions there. People are building data center. The other day I was reading about China, and we're talking about utilities, and then because you know that AI consumes a lot of power, and
Power.
yeah, so they've been investing a whole lot in power. They're already producing more than the other part of the world in terms of power. So in terms of AI, the expenditure is going to be significantly lower than a place like the US, right? In terms of power. So US is just going to be taking a position in terms of power generation, or it's going to be affecting consumers that live around AI data centers because there's significant power that's going to be pulled from the grid
Into
to
it.
that into it. even if they have like a specified, like a dedicated power to them, right? Those things take time to build as well. So, and those are kind of things that people are going to be investing. So, basically,
Investing in.
so sectors like the utilities, the logistics, the manufacturing, the tech, obviously the banks, and basically the chains like the Walmarts, the Amazon, the Targets. Those are places that I'll be looking at,
Yeah.
and then
Yeah.
basically obviously REITs, for example, are places that,
Mm.
yeah, the
Sorry to
things that,
interrupt. REITs, sorry to interrupt, just so that they hear it immediately. REITs are real estate investment trusts. So basically, companies, asset managers pool money together and buy different real estate properties. So you are benefiting from real estate investing without having the money to buy a whole house. Continue. You hear me?
yeah,
Sorry.
exactly. So, and for REITs, there are different sectors in REITs. There are different people. There are people that invest in, there are people, not
Commercial.
all
Yeah.
these big corporations build their, construct the buildings that they occupy.
Buildings. Yeah. So they're
They have,
commercial.
they rent some of these buildings, and people build, actually come up with these buildings and then let it out to them on a long-term basis.
Long
And they have,
lease. Yeah.
so they have a portfolio of buildings like that they let out to this corporation. So they're already hedged in terms of the amounts that the rental value that they're getting for a couple of years, and then they come to the market and they sell those shares, and because they have guaranteed volume, they have specified dividend that they pay. Some of them pay as high as 10-14% per annum if you look at it on a regular basis. So if you're the share price might not go up significantly, maybe 1 or 2%, but they pay dividend on a regular basis. So if your investment is dividend driven, or if investment type is dividend driven and not particularly value driven, those are the kind of sectors that you should be looking at.
Fantastic, fantastic. I'll say one last question, right? Um, what global risks should every people actually plan for? Now, the reason I'm asking this question is because inflation would always inflate. Interest
Yeah,
rates would always do is yo-yo, right? But there's a way newspapers or newsrooms hype news just so that it would trend to the point where the regular person is just carried with every wind of noise, right? So, but
yeah.
what data points would you say that even if you're not an economics person, oh, these are the things that you should be looking out for? If this one goes up, you are in good territory. If it goes down, you should be worried. Like maybe two or three, four data points that everyone should be looking at from a global economic perspective.
Um, Number one is interest rates, obviously. Yeah, you have to basically, you really have to know what's going on in terms of interest rates. It concerns you, affects your investments, it affects anything that you're doing. So whether you like it or not, anything that's happening in the Feds affects whatever it is that you're doing in Nigeria or Ghana or Tanzania or whatever. It might take a couple of weeks, it might take a couple of months, but it will
It
definitely
will
affect
transmit
whatever
to you.
it will transmit.
Yeah.
Yeah. There's increased government borrowing, right? So in terms of, if you are investing in bonds, for example, of different countries, you need to be able to be sure that they're going to pay back. We've seen some countries default. So if you are going to be investing in bonds, you need to open your eyes very well and be sure that they're not going to be defaulting. They don't have chances of default, right? Because nobody just wakes up in the morning and just defaults on bonds
Default, yes. Usually show
as a
signs.
country or as a company. They usually sign. So
Yes.
sometimes I just tell people that if you're going to be investing hard-earned money, you should know what is going on. You're not just going to invest and close your eyes and expect them to be doing magic, right? It's your money. You've worked hard for it, and you should follow the trail, right? Or follow who know road, like they say.
Yes, yes,
Yes.
yes, yes.
Security concerns as well. I mean, globally is also, she said pointers, right? But
Ye-
that's what you said. But those are things that are concerning, right? And people that have taken position buying crude from Venezuela. It was business as usual that they just buy crude from Venezuela and they just sell it to another market without, and then just change flags of vessel without anybody knowing what's going on. And there was a clampdown. And then basically what we had was just one vessel that was seized. However, there are several vessels that are lined up to load from Venezuela. That's a risk. Some people have taken positions. A VLCC holds about 2 million barrels of crude, right? At $60, that's 120 million, easy. Like they just seized. And there's some people that have loaded vessels trying to get out of Venezuela. They can't move the vessel out. They have to discharge the cargo back. That's
Yo,
money. Yeah, that's a lot of money. So we're just hearing, okay, one vessel was seized and all that. We don't know. Some people have already taken positions. There are already vessels
yeah,
lining up
deeper
to
than that.
load at the port. So
Yes.
it's a lot more deeper than that.
Mm.
And those guys are going to
You
have a
pay forward,
conversation.
right? You pay
Yeah,
forward.
yeah,
So
you pay.
you pay
Yeah,
forward
you
and then
pay
you go and lift. Yes.
exactly. LCs are opened by banks. Do you understand? Right? And then
Mm.
it might be they may have sold to a supplier at FOB. That means at the flange. It means that
Mm.
the supplier would the person that is receiving the cargo will come and
Is
receive the cargo there.
and
So they've
receive it there
collected.
directly.
Yes.
So they've
So,
collected money. Yes,
so
that's
if I
literally
want
how
my
it
money on
works.
time, I'll discount the LC and take my cash and move. The risk has passed on to you. Do you understand?
Wow.
Exactly.
Wow.
So,
Wow.
so if I've taken 2% on
Security.
120 million to move on with 107 million and 107 million whatever 60 $107 million, I've moved on with the cash and then I passed on the risk to you. You have a cargo you can't move out of Venezuela because there's a clampdown, and then you're just stuck. There's nothing you can do with it.
You're
You can't get
stuck.
your
Yeah, like
refinery.
you're literally stuck.
Yeah.
There's nobody
So
to hold.
exactly. So there are things
Political
that
risk.
yeah. So those are things that are affecting people,
Real
the
people.
real people, right?
Yes.
If
Even
the
to the supply of the crude oil and the availability of it. I can imagine if Nigeria, for example, Dangote was getting crude oil from Venezuela, just an
yeah,
imagination, just
hmm
the ripple effect of that on the society,
exactly,
because there can now be that breach in your process flow or your whatever is called your supply chain,
yeah,
right?
exactly.
Wow.
Yeah,
Wow.
so those are the things that affect petroleum product prices because they're importing crude from somewhere, and
Yeah.
then they're going to. There's obviously the processing. There's a price that comes with processing and all that, right? And
Yes.
then they have to take a position on those prices. They have to be competitive. It's not a charitable refinery, right? The guy has borrowed a whole lot of billions, and then
Yes.
it has to,
That's to
and then
pay.
everybody is saying that the prices should be at a certain percentage. Right now, we're happy that dollar is a lot more dollar. The exchange rate is
Stable.
a lot more stable, so he can play in the Nigerian market because at least he can change FX and source dollar at his, and they can hedge against any volatility in that space. But it's to pay him more to export to other countries because he's getting dollar for dollar and he's paying down on his debt.
True. True.
So,
Very, very
in
valid.
terms of things that you should be looking at in terms of interest rates, is security concerns in the different markets that you operate or indirectly affects the investments that you have. If you're investing in like the AI space and all that, an impact of if China refuses to buy chips from a company that you have invested in or the close space, it will affect you.
It will affect you.
Yeah, it will
It will.
affect you. So it's better to just keep a tab on all this kind of news because your price, your the shares that you buy from $100 can you can wake up the next morning or you can be trying to sleep when you just see the price go down to maybe like $8.
Yeah.
A lot of
Yeah.
things happen and then
A lot
it
of
just
things happen.
yeah, it just impacts on
Yeah.
your investments. So when
Yeah.
you're investing, you also keep tabs on it as well. Yeah.
Very, very, very well said. I would ask one final question. This is more like a final word.
Mm.
The whole essence of this is not for us to have an economic analysis session, right? That's
Yeah.
when we are having conference of economists or NEHG or any of those kind of things. But the essence of this call is for real people, like individuals, to actually position themselves so that it doesn't hit them in the face. what would you say that as an individual who is trying to be intentional about their finances, what would you say that how do you say they should be framing their mind as they're going into the new year? Whether it's in terms of what actions they should be taking, um, anything, right? How do you position your finances for 2026 from an individual perspective to make sure that okay, if wind blow, I'm still somewhere in the game. Kind of broad, but yeah, what do you have to say about that? And that would be your final word.
For me, I would say, okay, there are different phases, right? One, I would say you just basically master your cash flow. Um, you can manage what you don't, what you can't measure, right? You need to track your every expense. You need to have goals in terms of what you want to buy or what you need or what you want. You need to have an emergency fund, and then you need to basically tackle your high debts. If you have credit cards, if you had debts, you need to basically focus on paying down on those things, right? And because if you don't, you'll be doing yourself a disservice if you have a credit card debt that you are paying over 20% and then you're investing at 5-10%, and yes, you think you're making profits. You're just killing yourself. So basically grow your emergency fund, um, build build a future for yourself. If you have a 401k in the US, or you have some sort of fund where your company pays a percentage, you can match that percentage, because basically you're building retirement fund that is going to be available for you in the future, or when that age comes. Then it's very necessary that you upskill, you learn new skills that can help you in terms of like a side hustle, or in terms of making you more competitive in the labor market, so to speak. Those are key highlights that I would say are very key to surviving um, the next year and the year beyond,
Yeah, and going forward.
and going
Fantastic. I
forward.
was I was scribbling down so I won't forget. The first thing you said was master your cash flow, which
Yeah,
makes a lot of sense, right? And you gave the scenario of if you're paying credit card bill of 20% and you're investing at 10, why don't you crash these things down so that you are not running on a treadmill? No, you're running, you're sweating, but you're not moving forward. You're going
exactly.
nowhere.
So
Yeah.
you have you're making 100,000, and then you're investing 50,000. Yes, another, you're paying credit card debt, and then you're paying at 26%, and then you
Mm,
spread it over a while, you pay a bit, and then you pay. You're just, yes, it might look small, but at the end of the day, if you look at it, you're just
adds
spending
up.
hard-earned money paying off debt
Bill.
that is more expensive when you are investing. So
Yeah.
yes, it's good to structure. You can get a loan from another institution to pay down the credit card debt, right? And basically, so that at least you are getting cheaper funding. I mean, cheaper. You're lending. You're borrowing cheaper
Cheaper. Yeah.
from a financial institution. You can get a rate for maybe like 7% to pay down your credit card debt that is already bargaining, right, at 26%. So it's a lot more cheaper for you, and then you can spread it over 36 months or whatever, so that at least it gives you a room. It gives you
Respite.
room
Yeah.
and a respite for you to be able to invest or do other things. If you have,
Mm,
if you want to buy a home, then you at least you have a target of saying that this is the amount that you're going to be saving. But it's
mm.
very essential that you
You
master your cash
manage
flow
yours.
and
Yes. Master your
manage it.
cash flow.
Yeah, you
Yeah.
basically
Yes. Yes.
understanding what comes in and what goes out. And it's also very good to have like a pattern of how much is going in and out, and just not just leave and then just whatever comes in and comes out, because it's just going to bite you. There's certain people that um an expenditure, an unnecessary expenditure, or an unplanned expenditure of a week can wipe them out, and they will not recover for 6 months. So it's very, very essential
Yes.
that you keep you keep like a pattern of how much you spend. You know what your expenditure is. You know what's how much you earn, you know the bills you pay, and then you look at your expense as well. Is this actually necessary? Is this actually important? Can I remove this for this week or for this month and all that? And it's just basically keeping yourself not
Mastering your
living from
finances.
paycheck to paycheck. But even if you want to plan a holiday, at least you're going to save for it. But what's the point of rolling in debt when you're going to be scared that someone is going to come and knock at your door and then you go for holiday? And I don't know.
Well,
Yeah.
you only live once. There's one theory like that.
Yeah. Okay. You only live once.
There's one theory like that. I mean, but yeah,
Yeah.
I think you've said it and you said it well. One of the things that, so we've been having a series for the past 12 days, right?
Okay.
Talking about different aspects of personal finance investing, the economy. And this is the last day on that series. Yay. And we are shutting down for the
Yeah,
year.
right.
Like we're done. So Merry Christmas to everyone.
Right.
But I mean, we started the very first day with planning your finances for 2026. And it literally just hammered on what Olayemi said, because I have seen people who earn well, but after all said and done, they say they want to invest. But when you actually bring the investment opportunities to them, you realize that their problem is not investing. Their problem is their personal finances are not in order. Right. So I encourage you, if you haven't already, go and watch the replay of the very first day on planning for 2026. In that video, I did a walkthrough. I have a sheet where I actually say, what did I spend on what? Where did this money go? Because it's as simple as that sounds. A lot of people don't know where their money went. Like literally, they can't account for last month's salary. They can't. So your bank statements will help you, different things will help you, but the idea is know where your money went. On this note, I want to say a very massive thank you to Olayemi. You've been a gracious guest and you've answered all our questions. And I believe even the someone had asked a question about the returns on rates, and I think you answered that
Yeah, it
while we were
varies on
right
it varies
after.
from different sectors, right? So from
Yes,
as little as
yes,
five
yes.
percent to some of them are like 14%. So reads the
14.
different types of rates. You can read up on them, and then you should join the club if you want to get more insights.
Yes,
Yeah, you
join the money
should
with
join the
club.
Money with Club. It's actually
Yes, thank
it's
you
actually
so
the best
much.
place to be, and then you get different people from
Oh,
different sectors, different
wow.
different sectors, different experiences, young, average. I don't want to say use the word
Let me
old,
spotlight you.
about how to something medical, and then it was so insightful. And then the different things, motivational speakers are there. There are a whole lot of people with different that know a whole lot of stuff. So I think you should join the Money Week Club, and it's you get more than your money's worth, and then you network
Oh,
with a whole lot of people.
yes.
Thank you.
Thank you
Yeah,
so much, Alaimi. Thank you. Enjoy the rest of your day.
you too. Merry Christmas
Bye.
and
Merry
have it.
Christmas.
Yeah. Bye.
Yeah, bye. Thank you guys so much. This is the last day of our Vlogmas series. Like I said, we talked about all sorts in the money space. We don't lose plots. We talked about all sorts. We even talked about leveling your career yesterday, leveling up your career. Why? Because it starts with making money. One of the things that Olaimi had said was upskill to make more money, because if you want to invest, it's not air you're going to invest. You're going to invest cash, right? So if you want to start that money journey, how to plan your finances, how to make more money, how to avoid the Christmas rush, the best gifting ideas in Lagos, right? All things money that you would find valuable. It's all in a playlist. If you haven't already, please subscribe to our channel. I realize that most of our viewers, I think based on the data, like 70% of the people that watch this channel have not subscribed. Guys, yo, just click on a button and subscribe to the channel, and support us, right? Because as people subscribe and engage with us, YouTube recommends us to more people. So a like, a share, those things help pushing our gospel. So on this one, I want to say thank you. Thank you for watching and staying with us for the 12 days. If you have any questions, of course, you know that you can drop in the comment section. I will be sure to respond to you. These sessions were powered by the Money with Club. The Money Club is a community of investment professionals, investors, not investment professionals, investors, different walks of life. And we come together. Like Olayemi said, we had a session with a medical doctor. and she just talked about some basics, very, very insightful. And that's how smart we are, yo. And we are there to make money. We are very, very focused. So thank you guys. Enjoy the rest of your day and see you in 2026. Bye.